Let's move on to the Nigerian market. We saw the Nigerian all-share index close down up 0.12% at 33,468. And we also got some company news. We saw Lafarge WAPCO today release earnings results for full year 2012. Revenue 87.9 billion. That's up from 62.5 billion last year. That's obviously a 41% growth, and profit after tax went up 70%, up to 14.51 billion from 8.5 billion last year. We of course know that that company declared a dividend of 1 naira 20 kobo. So joining us to take a look at the equities market performance for today, we have Babajide Solanke, and he's the head of research at FSDH Merchant Bank. Babajide, thanks for joining us on the show today.
Thank you, Didi. Thank you for having me. Quick correction, I'm not the head of research at FSDH Merchant Bank. Okay,
now let's get straight into the earnings results that we heard today for Cadbury and Lafarge WAPCO. We saw Cadbury revenue down 1.6% to 33.55 billion. We saw profit after tax down 5.7% billion. Now on Friday, of course, we saw the company declare 50 kobo dividend. Now, as I said back then, a lot of people expected 1 naira, especially since the last payment from the company approximately 8 years ago was 1 naira 30. However, I mean, we still saw the market react positively to that news. So now, with revenue and profit after tax down, it would be good to know if you feel that those results were in line with your expectations and what we can expect going forward.
Thank you, Didi, once again. For Cadbury, I think Cadbury is a stock that has clearly come out of the woods, if you ask me. Cadbury, the current management has been able to take the company away from its loss position into profitability, and well, we've been seeing it quarter on quarter, at least for 2012 quarter on quarter reports, that there's been a decline in Cadbury's turnover revenue, if you can call it, while the company's profit after tax and PBT profit after tax have gone up on the basis of operational efficiency. The result was disappointing, you can say that, but largely out of most of the things that made the result of a disappointment were things that are outside the company's control. One of them is security challenges across some states of the country, which has not enabled the company to be able to distribute its products across board. And it's not peculiar to Cadbury. Almost all the companies in food, in the fast-moving consumer goods space, and companies that have distribution network across the country have suffered the same fate, even flour mills as well. For the results, yeah, it disappointed all because we didn't expect them to pay in the region of 1 naira as most people expected. But again, based on historical dividend payout ratio of about 70%. But the company has clearly reduced that to about 40, near 50%, which I believe is some kind of strategy for the company to finance its expansion program going forward, given the tough operating environment and the tight liquidity position in the market.
Now let's move on to WAPCO. We saw revenue up 41%, profit after tax up 70%. It would be interesting to know how encouraged investors are by this result from WAPCO, and does it overshadow some of the negative sentiment that we saw on the back of the 1 naira 20 kobo dividend that was declared? I mean, that's a 1.7% dividend yield.
Yeah, the dividend yield is woeful, and we expect the same dividend yield position for most of the companies that will be releasing their result, given the current prices at which these companies are currently on. So significantly, what I mean by that is that investors will be making more money from capital appreciation rather from dividend yield in the near term. But having said all of that, well, apparently the market welcomed that result. They were happy with that result because, as you see, preliminary report shows that Lafarge WAPCO ended the price gainers list. That just speaks for itself. And again, if you look at what Lafarge have done, they've done about 60% increase in dividend compared to last year, about 75 kobo they paid. They're paying 120. That's significant, and that can indicate into the future that the company is in for better times ahead.
Now we're expecting 2012 financial results from the bank, of course, and now some analysts believe that the bank will report strong earnings. I think most analysts actually believe that those earnings figures will be strong, especially following income that they generated from high bond yields in their last financial year. Now, of course, with bond yields reducing this year, it will be good to get a sense of your expectation for 2013 in that banking sector.
I agree with you with the initial introduction for the banking stock. Of course, that we expect strong earnings, given the historical quarterly performance for 2012 financial. And as you rightly said, most of those earnings were made from, the monetary policy stand of the central bank, which the banks took most advantage of. And going forward to 2013, there's only one option left for the bank, given the outlook for inflation, which we expect to be single digit for most time of the year, and given the current monetary policy stance, there's only one option for the bank. The banks have to expand the balance sheet, they have to grow risk assets. Well, that will be a tough order, given the current macroeconomic environment and all the problems the banks have always highlighted being the reason why they've not been able to extend credit still exists. So we'll see. It's going to be a tough year for the banking sector, but we'll see the way it plays out. But evidently, we expect the banks to expand and grow their balance sheet in terms of risky assets.
Now, there's one point that I must touch on. The NSE's trading figures for February. We saw that domestic investors have increased their share of the market in 2013 to 61%. I think that's a surprising figure there. But it'll be interesting to know what the scope for growth for local investors to remain dominant in the market.
Well, we must be careful about that data, because if you say local investors, of course, local investors can be disaggregated to mean institutional investors and retail investors. For institutional investors, of course, we've seen a substantial comeback from PFAs, from insurance companies, and etc. And for retail investors, of course, that's a drag in the feet. Of course, they have a set of what's going on, but the pain of the crash, that we had in previous time hasn't fully been eliminated. So going forward, there's still significant scope for the Nigerian economy. If you believe in the Nigerian economy, everybody is aware, and everybody is conscious of the fact that the Nigerian economy offers enormous potential for economic growth. And if we have the outlook for economic growth in Nigeria to be positive and to be, one of the strongest and fastest growing in the world, then we can only, imagine the trickle down to the equities market. So there's significant scope, by and large, for the market in terms of local participation. And the NSC, I must confess, is doing a lot of job. One of them is the issues portal that has just been launched, and we will continue to see people coming to the market. There's significant scope for expansion in the equities market.